Before we do, I just want to welcome everybody to this class. Sorry if you had to hear my explanation. I've been deathly ill. I was bitten by a venomous spider that basically put me into a minor coma for like 10 days. And there's still a bunch of venom in my arm that's eating away at my arm. It's totally crazy. So if you missed the pictures before, sorry you missed the slideshow. If there's anybody here that's new for your first time, please let me know. I always like to know when I have new people here. And if you are new, it's also good to have you here. Welcome. New or really somebody who's still learning and new to the Ichimoku Cloud. So Angela says she's new. Welcome, Angela. Good to have you here. I want you and all the others to feel comfortable asking questions at any point in time. Oftentimes we'll be covering a lot of new stuff, and this indicator is rather strange. It's not your typical indicator. It's very different from most Western indicators out there. And so with that being said, you might have questions about some of the components. So let's go ahead and get into this. And while I'm into it, Jorge, it's news. Welcome. Good to have you here. I'm going to get into this, and what I'm going to do is as I'm getting into this, I'm going to explain it, some of the intro concepts to it, and then we'll start to dive into a little bit further on how we can use it, what it's communicating to us as traders. Okay, so the first chart I have up here is the Euro-US dollar. I want to dive into actually the 4-hour, and then we'll play with dailies here. So we're going to take a look at the 4-hour chart for a second and talk about why. Now, the reason why this is somewhat attractive to me is because of this particular formation that's happening right here. For those of you who don't know that new, this is a Kumo. This indicator in a Western translation is the Ichimoku Cloud. It's kind of its nickname. And with that being said, it has the nickname Ichimoku Cloud. This cloud is this thing right here, or the Kumo. And we're going to talk about that. And we're going to talk about why this is really attractive and significant for me coming up. First of all, the euro dollar has had a pretty aggressive sell-up from 133 down to 126, about 700 pips. The first leg was the most aggressive. The second leg was decent, but not super aggressive. And the third leg was a little more tempered. And instead of making it back here to 126, it actually posted a particular candle that suggested likely reversal and not going to make the same lows as before. And since then, it's followed up with two 4-hour candles that have pushed higher. In that process, the Kumo, or the cloud, has made this interesting formation. It went from very thin to very thick, and then back down to thin, and then this straight kind of flattened out over here. Now, why is that so important? Well, first of all, for those of you new, the Kumo represents support and resistance. Therefore, if it's thick, then it represents a thick amount of support or resistance, depending on which side price action is on. If it's thin, then it represents a lesser amount of support and resistance. But what's most interesting about this one is this flat section right here. This is called a flat top. And it generally only occurs in regards to the Senku span B. The Senku span B is this blue line of the Kumo. The Kumo is actually just the shading in between the Senku span A and the span B. And real briefly, what is the span B and why is it what I think more important of the two is the Senku span B simply takes the last 52 candles. We're on a 4-hour chart, so we're talking the last 52 4-hour candles. It takes the absolute high and the low, and then what it does, it draws a line down the middle of that, the 50% marker. If that high and low hasn't changed for the last 52 candles, we get something like this. And that's important because if highs and lows and price action haven't changed in 52 candles, then you're in somewhat of a range. And if you're in a range, ranges tend to move towards back the middle. That's what they like to do. They like to regress back towards the middle. And so with that being said, sorry, adjusting the headset here. So with that being said, they have a tendency to gravitate towards these little flat sections here. Jorge's saying you don't see any graphs. Everybody else seems to be seeing graphs, so maybe you just need to log out and log back in. That should do it. All right, this one has a little bit more significance, though. it's not just a flat top that's going to attract price or likely attract price. It also is the exact 50% retracement of this high to this low here, which is the last major swing high to low. So it lines up perfectly with this flat top and this previous support level here. So likely price is going to want to gravitate towards it, especially after this little candle at the bottom here, which signaled, hey, it's unlikely it's going to want to continue. This thing's going to probably want to reverse course here, or at least try and make a push up to the upside. So probability suggests, Ichimoku theory suggests it's very likely it's going to touch this probably within the next 4 hours. Now, should it break that, traditional Ichimoku theory would say, hey, we have what is called a Kumo break. And a Kumo break is a situation where the market is likely to reverse if price action has been on one side of the Kumo for a long period of time, or one side of the cloud. Reason being, the Kumo represents support and resistance. The market spends a long time on that one side of it. That means that a lot of the order flow was pressuring it to that side, in this case the downside. And if the market starts to reverse, those orders have to reverse or at least exit out of the markets, aka all the shorts have to exit out to possible long. And if that does it, the longer we've been on one side, the longer that swing back on the pendulum of the order flow kicks the thing back up. The Kumo can often represent support and resistance. So when it spends a long period of time, when the market breaks the Kumo, it often signals a reversal in the market. This one has a little bit more significance because it's a flat top for an extended period of time, and it's a 50% Fibonacci. But wait there, we have a couple things that we actually have to take into account. First of all, we have a 61.8% Fibonacci of the same move, very nearby, only another 40 pips higher. What's also more intriguing about this is that when we zoom out to the daily charts, that 61.8 also happens to be the 20 EMA. Exactly at the 20 EMA. So let me delete this for a second here. It's right at the 20 EMA. And the 20 EMA has held this pair, contained this pair, several times before. So if it is going to do it again, that would kind of be an optimal time for people to come back in and sell it. It would be a great location for people to come back in and sell it if the institutional market felt, hey, you know what, this sucker is going to go back down. It's going to continue to lose ground. So with that being said, it's kind of a nice little ambush place. However, it also means that if the market can really get past this 61.8 here, from a daily chart perspective, there really is nothing limiting it until almost 130. And going back to our 4-hour chart, since there would be no more fibs in the way, that Kumo break would kind of signify a very legitimate reversal. Typical flat top Kumo breaks like this, where the Kumo or the cloud has this flat section here. Typically the way that happens is that once the market closes on the other side, it usually pulls back to the flat top and oftentimes finds one of the three lines. This Tenkan line here, which is this white line, the 20 EMA, which is this blue line, or the red line, the Kijun line. It generally finds one of them inside the Kumo and uses it as support. Sometimes it'll just sit on top of the flat top, and that's it, and then it bounces and goes off in a reversal. But sometimes it likes to find these lines inside there. Good case in point of something that it liked to sit on front of the flat top recently was the daily sterling dollar on this one here. It found the flat top twice, touched it exactly, and then ended up reversing for a very big move from 49 up to 160, 1,100 pips. And so that could be happening, and that could be underway inside this year US dollar. So this has piqued my attention. It's become very important and something that I want to watch very carefully because it could be signaling a reversal in the year US dollar. And it's coming after a relatively decent sell-off. So for this thing to get really aggressive in the face of this sell-off here would kind of add further strength to this reversal here. You know, these three candles have taken out the last 5. So with that being said, you really want to keep an eye on this one here. My guess is within the next few hours, maybe within even the next hour, it will definitely hit this flat top for sure. Okay, so that is my thoughts on your US dollar. In terms of, somebody had an original question. Jack said, glad to hear you're getting better. Where do I see your US dollar and pound US dollar going in the next few days? Let's talk about, so I've given most of the ideas of where I think the US dollar is going to go. And what kind of scenarios we need to see for this to reverse to the upside and make a big move, and where it will likely go. If it does that, if it can get past the 20 MA, I think it's very likely it's going to go to the Kijun. However, if it stops here, hits that, and then gets rejected off of it, then chances are it's going to find its way back to the 126 level. If the rejection is fierce. If the rejection is fierce, it's got a good tall wick to the upside, and the next following day is a good selling day, then that means that the market was apropos to really sell at the 20 MA, just sell it at a cheaper price. So that means more than likely I'll make a second attempt at this 126 level. So that's where I see it over the next few days. Hopefully that answers your question there, Jack. All right, another one I want to look at here is dollar yen on the daily. Dollar yen's been a very interesting pair. A lot of talk of intervention on 85. That didn't happen. The 20 EMA has held it for quite some time. Here, 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 these rejections right here, and here most recently. What's most interesting, though, is the last one. It definitely closed below the 20 EMA and used it as a rejection, but it went right to the Kijun, and I think it only went like a few pips past it. So its high was 89, and the Kijun was at 84. It would have went 5 pips past it, and then got slammed back down. Why is that significant? Because the Kijun represents what is called the trend line. That's what Kijun stands for, trend line. And as long as that continues to slope down and contain the price action in combination with the 20 MA, then that means that the trend is still to the downside. We want to be looking for more selling opportunities than buying opportunities on the dollar yen. In fact, if you just look at the candles, they're far more red than blue, so that should communicate directly to us. We want to be looking for more selling opportunities than buying. If you've been buying more than selling, more than likely you've been losing money, or you've had to be very, very accurate to make money out, because the buying opportunities really haven't been there as much as the selling has. Selling opportunities have been very proficient, and that's what the Ichimoku is communicating to us through the falling Tenkan, through the falling Kijun, and through all these lines being in order. The Tenkan being below the 20 MA, being below the Kijun, that's what we call a certain harmony. On top of it, look at the Kumo. Kumo is incredibly consistent, very thick, the trajectory is solid. It's not a sharp angle, but it's solid. That means that we're just in a steady, consistent trend. That doesn't mean that if it sells off, you should expect 3-4 red candles in a row and for it to just drop hundreds and hundreds of pips. It means that it's better to trade this on a pullback based on the angle of the Kumo than to actually sell on breaks on this one here. So that's what this one's communicating. I like this one. Keep an eye on this dollar yen, though, because pullbacks to the 20 MA and the Kijun present opportunities. Okay, Aussie dollar. I'm going to get to Aussie. After Aussie, I want to look at Kiwi, and then after that, I want to look at Euro CAD, CAD Swiss, and then I can look at Jack's pound dollar and get to some questions. Okay. Jack has a quick question here. I'm not clear for Euro dollar. Is 128 the point at which it can either swing higher to 130 or swing back to 126? Sure, I'll go over that one more time. Why not? It's not 128, it's the 20 EMA. That's really the swing point right there. If that resides at 128, right now it's at 127.95, which is also the 61.8 of this move from here to here. In fact, I can draw it again. So they all reside right at the same place. So with that being said, the real swing point, in my opinion, is the 20 EMA. If the pair can break it, close above it, then I think that really suggests that a move back to the Kijun, which is at 129.60, is very likely. Remember, the Kijun right now is flattened out, saying that there is no trend. It means we're oscillating in a range. The Tenkan is mostly sideways with just a little bit of downward movement, saying there's a little bit of downward pressure, but there's no real serious trend in. So hopefully that answers your question then, that the real swing point is the daily 20 EMA on that one there. That's what I consider to be the most important point. Jack says 27.95. Is that the point to look out for? Again, let me repeat. It's the 20 EMAs. It's not the price. It's the 20 EMA. And the reason why I'm not saying a price is because the 20 EMA is evolving day by day. So the best thing you could do would be to pull up a 20 EMA on your chart, and then from there, watch that one and how the 20 EMA evolves and how price action evolves. Because I could say 127.95, which is his current posting, but it may not get there till tomorrow the next day, and by that time, the 20 EMA will have changed. So the best way to do it would just say, hey, keep an eye on the 20 EMA and price's reaction and response to it over the next few days. It could even touch it today. So keep an eye on that one. Hopefully it answers your question, Jack. Good question. Okay, getting to Aussie on this one here. Why is Aussie interesting to me? It's interesting to me because it has a possible Tenkan Kijun cross coming up. It's either going to be one of those situations where the market really starts to fail dismally, it enters the Kumo and breaks the other side, and then goes for a ride, and it's showing some signs of that. And what are some signs of that? Well, first of all, we've been above the 20 EMA for quite a long time. Then all of a sudden, boom, boom, we started to get below the 20 EMA, and even below the Kijun, something we hadn't touched since early July. Then we started using these lines not as support, but as resistance. Here, 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 Kijun as resistance, Kijun as resistance, 20 EMA as resistance. So we're not quite using them as support as we were for 2 months. We're using them as resistance now. So that could be communicating a potential fall is on its way. And so we have to be very cautious about that. Markets are very liquid right now, so they're unlikely to go straight in one direction. They're likely to oscillate a little bit, pull back to certain levels a little bit, and then finally start to drop off. Kijun is often one of the last bastions of defense, and it has treated that as a line in the sand so far. So if we start to see it enter the Kumo in deep penetrations, if we get breakouts on the Kumo in this flat section or in this flat section, then that would be a little bit more ideal. We want those flat section areas because they'll often use those as a row reversal for resistance and then sell off further. And so the last Kumo break, once it did it, it went from 87 all the way up to 92. It's a pretty good move. So that's why I'm keeping an eye on this one here. But I'm also keeping an eye on it because if it starts to use this Kumo as support, and this Kumo is pretty thick, and the angle of this is pretty solid. If it starts to use it as support, it wouldn't take much for this Tenkan, this white line here, to turn upward and cross upward over the Kijun line. That is what is referred to as a Tenkan Kijun cross. So with that being said, with the Tenkan Kijun cross, that's generally considered a bullish signal. But when that Tenkan Kijun cross happens above the Kumo, that bullish cross happens above the Kumo, it increases the strength of it and makes it a much stronger signal. So we could be getting a Tenkan Kijun cross that right around the 9,000 or 9,100 that would likely create an attack back on 92 and the previous highs back on 93, 94. So keep an eye on that one there. That's why I'm watching this here. Jack has a quick question. Sorry, yes, but how does one get the 20 EMA on any chart, please? You know, I don't know if I can answer that directly because I don't know what charting package you're using. If you're using MT4, you just go to the Add Indicator section. It's under the trend. And then you go to a moving average and you want to choose an exponential moving average. If you're using another broker platform, it would be hard for me to say because each broker platform is different. But it's really a simple indicator that you just need to add. Hopefully, if you can mention it's an exponential moving average set at 20. Exactly as Harvey said. The other thing about it is that if you can mention what broker platform you're using, maybe somebody here is using that same one and they can text message you to help you out with that. So hopefully somebody in here can help you out with it. That would be great. I only am familiar with a few platforms, so there's only so much I'd be able to say, and I need to teach class at the same time. So hopefully we can accomplish two shots with one stone here. Okay. All right, so that's Aussie dollar. I want to take a look at Kiwi, which is behaving very differently than the Aussie dollar on the same time frame. Take a look at the Aussie dollar. Price action is pretty solid, hasn't touched the Kumo. It's showing some signs of weakness, using the Kijun as resistance, but still has yet to actually approach the Kumo. This is a very different scenario than the Kiwi dollar, which has not only attacked the Kumo, and you use the Kijun as resistance and the 20-MA as resistance, but it's probed the bottom end of the Kumo, which is a very deep probe of the Kumo, aka support or resistance. So with that being said, that makes it a little bit more serious. It makes the greater probability, or it increases the probability for reversal. On top of it, its probe right now is happening right at a flat section. In fact, if I were to pull this up, that 50% Fibonacci is right there at 69.82. So a daily close on the other side of this, we'd want to look for a pullback to this level here, and then look to possibly short there on the Kumo break system, which would first target this 61.8 fib, which is 100 pips away. Beyond that, if we can get below that, you probably want to, make contact with 6,800. You want to see how the market responds to that, because this was a major swing low. If we can get beyond that, and it seems very likely that this thing could push down to 65.50. If we continue to see a lot of sell-off in the down, risk conversion in the market, that scenario becomes a lot more likely. So keep an eye on this one here, potential Kumo break on the downside. And what also that sets up is that if Kiwi dollar is in a much weaker position than Aussie dollar, sets up a situation for Aussie Kiwi gains. And that's what we're seeing right now. Aussie Kiwi's had a big up day, it's taken out a previous high after a Kumo break, and this thing could be headed back for a major run back up to 130 and higher. So keep an eye on that one. If the Kumo break happens on the Kiwi dollar, while the Aussie dollar continues to hold its ground, that'll set up Aussie Kiwi gains. Very, very likely for that. So keep an eye on this one here. There's a lot of potential options on both the Kiwi dollar side and on the Aussie Kiwi side as well. Okay, Euro CAD, something that's probably been overlooked for a little bit. Euro CAD was in a great downtrend for a long time. I got to sell this many times and make some really good money. It was just a great pair. I wrote about it. I talked about it. I was on TV talking about selling this throughout this entire trend. And then once it did the Kumo break, that was it. Pair has not been able to make any aggressive sales since then. What's more interesting about this is that it has kind of double topped here, but instead of responding very aggressively and selling off very aggressively, it literally came right to the Kumo and has kind of held its ground. In fact, it's kind of used the Kumo as kind of a prop to work its way back up. If this continues, and it continues the Kumo as a support, it becomes very probable that this thing will set up a Tenkan Kijun cross in the next few days. And that could become a very bullish signal. To get a bullish Tenkan Kijun cross above the Kumo, which increases the strength, after a Kumo break situation like this, means that you have two signals that are converging on each other and basically saying the same thing. The Kumo break says reversal, then you have the Tenkan Kijun cross, which turns in your play to the upside. That could set up, first of all, an attack back on 36.76, but a much bigger move, possibly up to 140 and maybe all the way past to 147. You have to look at long-term fibs to see where potential targets are. So 38.11, for some reason 38.11 doesn't quite do it for me. Neither does 42, but 46 I kind of like that because that was a swing low here before. So fibs are not my favorite on this one here. They don't seem to match too well. I would just keep an eye on this Tenkan Kijun cross here on the daily. This could happen within the next 24 to 36 hours. If it's going to happen, it's going to likely happen this week. And so that could be setting up a very big upside move on Euro CAD there. Definitely something you want to watch out for. Okay, last one, CAD Swiss. CAD's been getting beat up across the board. Dollar CAD's been beating it up. It's been making gains. Euro CAD, Aussie CAD, Pound CAD, everything's been beating up CAD. And if you're in my price action webinar last night, you would have heard me talking about CAD Swiss. That's probably going to sell off, and that's exactly what it did today. Sold off aggressively, quite aggressively, and it's really in an environment where it's set up to probably return back to these lows here at 9,400. We had a massive Kumo break. We never visited it again, and then we had a Tenkan Kijun cross below the Kumo here. That increases the strength, makes it a very strong sell signal. That was back at between 101 and 102. And here we are at 95, 500 plus pips later. And this thing has just been nothing but selling since. Now with that being said, there's no signals available on the daily, let's see if this 4-hour has activated, if it's still available. Last I checked this morning, ooh! It looks like the crossover happened about a candle and a half ago. When I first checked in this morning, it hadn't happened. So the Tenkan Kijun cross happened on the 4-hour of a candle and a half ago. So it's kind of run a little bit, almost too far for us to get in. Yeah, darn, that's a shame. When I first looked at this morning, that was a great signal. So that one's kind of run. With that being said, and the stick Kumu and the Kumu diving here, the 4-hour supports the daily. They're communicating the same thing, suggesting that this thing is probably going to find further losses and attack that 9,400 level like we talked about. It may give you another signal on that one there. Keep an eye on this one here. It will need to go for a run and then come back and reset, kind of like this one. So keep an eye on that one there for potential reset of a signal in the near future. It may have one on the 1-hour chart. Not a big fan of the 1-hour chart on the CAD Swiss, especially with the low liquidity these days. And it doesn't even have one. Maybe a 30-minute. Not even on a 30-minute. Very interesting. So, yeah, nothing available on that one right now, but keep an eye on that one. God, such a shame the class was a few hours early. We could have gotten in that one. Okay, with that being said, I want to take some time to turn to questions. Kind of explain some of the mechanics of the Tenkan Kijun cross, the Kumo break system. To those of you new, those of you who've been here a while, let's get into some questions here. Let's see. Jack also wanted to look at the pound US dollar and where I see it over the next few days. Let's take a look at that. Pressure is kind of hemmed in by this 20 EMA right now. You know, it's rejected off this several times. Boom, 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 boom. Here and here. So it's kind of hemmed in by that. It's got some short-term low here support, but it's nothing major to write home about. I think if anything, it may find, you know, some support along this Kumo thing here. I mean, this Kumo is pretty thick and pretty solid. So it's communicating that it has a pretty decent chance of finding support there. But right now the pressure is on because every time it gets hit by the 20 EMA, it seems to sell off. We're not talking aggressive sells, so the market probably hasn't convinced one side that the bears really are in control. They're in a light amount of control, but not a medium amount of control. I see likely more losses for this pair. Until it can have a daily close above it, you probably won't see many new technical buyers coming in. Another place that it might want to turn around, as I mentioned before, is the top of this Kumo here, so keep an eye on that one. If it should break the other side of this Kumo, yikes, that could be a big break for this pair, and that could signal some serious losses in it. Let me see if there's a fib there. With that flat top there, there's a long enough section. Doesn't quite match up. Maybe this one matches up. That one matches up a little bit better. Yeah, it's not bad. This last little dunk dunk. So, in fact, it's actually matching up with current price action. So, yeah, if it breaks this 50% fib and the Kumo and has a daily close on the other side of it, chances are it will likely attack the 61.8. Should this collapse, you really only have this major support here, and then 45 and 43 becomes very likely. So, it still hasn't made up its mind whether it really wants to sell off aggressively yet or not, because the price action just isn't there yet. But the Tenkan is falling, the Kijun is starting to fall, and the 20 EMA is starting to turn downward at a slightly sharper angle. So that communicates that the pressure is slowly mounting to the downside. So I see more likely losses than gains for this pair in the near future. So that's what I'm seeing on that one there. So hopefully that gives you some idea. Hopefully that gives you some idea. Okay. Next question. Carl Blink says, hey Chris, I'm short on the Tenkan on the TKX 4-hour year USD. What do you think? Let's take a look at that. Oh, that's sterling. Sorry. Well, the good thing about this 4-hour TKX is you really don't need a big stop because the other side of the Kumo is already thin and it's a flat top. chances are it's not going to just hit this and then sell off again. Chances are if it hits this, it's probably going to push a little bit higher. So you really wouldn't need to stop much beyond this. The one thing I don't like about this one is that the TKX came after a 2-candle push, and this particular candle here with strong rejection on the downside, the crossover probably didn't happen until somewhere in this candle. So it's not my favorite, but in essence it is a TKX, and it's something, you kind of have to sit through. If you're trading Ichimoku and you're a TKX, Tenkan Kijun cross trader, you kind of have to accept the good ones with the bad. This last TKX right here did very, very well. That thing sold off somewhere around 127. The thing went down all the way down to 126, so you could easily snag to get 160. Your entry's probably between 2650 and 2700, and your stop really doesn't need to be higher than 2760. So it's not bad. It's got a defensive posture to it. You really don't need to keep a tight stop or a huge stop on this one here. You're gonna, this is one of those. It's kind of in an in-between zone. You'd have to let it ride out. If you're trading the pure Tenkan Kijun cross, you'll have to let this one ride out to see how it plays out. There's not much really else you can do on that. So hopefully that answers your question. Okay. Okay, Jack one has a question. May your US dollar retest Kijun line at 29.50 or near 50% Fibonacci from 32.50 peak? May the euro US dollar retest the Kijun? Such a polite way of asking. Again, my thoughts on this one is that the chances of it hitting this Kijun, which is at 29.60, become highly likely if it can get a daily close above the 20 MA. If it can get a nice daily close above the 20 MA, and then it starts to treat it as support, then it becomes a very high probability target. If it can't do that, then it becomes a very low probability target. If it keeps rejecting off of this, and then getting pushed back down and reject off this and push back down, then that really decreases the chances for it right now. The 20 MA seems to be hemming it in, and that's probably going to be your short-term line in the sand on this one here. So that would be my qualifiers on this one here. What I'd really be watching for is how does it relate to the 20 MA. So hopefully it answers your question there. Abel has a question. If the blue line at the Kumu is Senko B and the white line is Senko A, then what does it mean if they reverse? I think you call it cloud flipping. It doesn't necessarily mean anything. It can mean something, but the thing is, it's not consistent enough in meaning something to really make it a study. The tests really don't show that cloud flipping is really anything significant. I couldn't find any advantage, any edge, or any statistics on it that really showed me that when the cloud flips, it can likely indicate a turning point or not indicate a turning point. So with that being said, I ended up kind of discarding it. There just wasn't a noticeable edge. I mean, in short, what it means is that in this case right here, the Tenkan and Kijun went from belly side down to belly side up. And that means that the Tenkan and Kijun, the only way they can do that is the only way the Senko Span A can do that is if the Tenkan and Kijun advance pretty rapidly. Remember, this line is the halfway point between the Tenkan and the Kijun, shot 26 time periods ahead. So if these accelerate really fast, then the Senko Span A will turn fast. And it'll take a lot longer for Senko Span B to catch up because it needs a good 52 candles. Remember, it's based upon the last 52 candles price action. And it's based upon the highs and the lows, the absolute highs and lows of that time period. So if this thing turned really fast, chances are it's going to take several candles for the Senko Span B to catch up. So I don't necessarily think that it means anything. I don't pay much attention to it, and I would suggest that it really doesn't mean anything for you either. John G says, Chris, maybe if you have a moment, can we also discuss Euro Sterling for a good swing trade? Sure, let's take a look at it. I think there is a couple options. on this one here. You can wait for, possible touchdown on this one here because it had a very violent reaction to it. This was a 6-month support way back in 2008, I believe. And so it was a resistance ceiling, and that's why it had this very strong reaction to it before. The sell-off hasn't been totally convincing, but it has been hemmed in by the 20 MA. Now all of a sudden we're pressing above that. The Kumo really doesn't give you too much here for a Kumo break opportunity, and a Tenkan Kijun cross won't give you anything either. So I think your best opportunity for a swing trade here would be to wait towards a sub 81 touchdown, look to buy it, first take profit at the 20 MA, and then shoot for this move back up to 85 here. So that would be the one of the neater swing trades out there. Let's see if I can find something on the 4 hour. Kumo breakout was good on that one there. It's already gone. Any others? Yeah, that's all. I would say the daily chart is the last one. That one I talked about there, and that touched on the level because this one's already gone. It's already too far away from it. So we can't use the Kumo break on that one there. So with that being said, that's my swing trade on that one there. Hopefully it helps. Nakisi says gold daily. I can do that. I have to switch programs and charts for that. That's fine. But let me get to these other 2 quick questions real quick, and then I can get on, and then I can take a look at gold daily. Gold's kind of a mess, but we can definitely take a look at it. Jack says, do your hedge fund trade on H4 charts set up signal, not on hourly charts? Do my hedge fund. I don't own a hedge fund, but I trade for 2 funds. If that's what you're talking about, my funds trade pretty much only on 4-hour and daily time frames. We do have some proprietary methods on 1-hour and 2-hour time frames. That's maybe 30% of the signals, but 66% of the signals are on 4-hour and daily time frames. So hopefully I answered your question. Jack has another question. If the FIBO measure on the second higher low, Fibonacci measure on the second higher low, another swing up may be seen in the future. Can it be the case? Cable. I need more. It's really hard to follow that kind of comment there, Jack. If you could give me the pair, the time frame, and maybe some exact moves, that would be great. While we're doing that, I'm going to pause these charts. I'm going to pull up my gold program, and we can take a look at gold. Okay. You're welcome, Nakisi. Absolutely. Glad I can help. And FX Truck, I was talking to the president the other day, and they're working on getting precious metals built into there, so hopefully I won't have to do this anymore. I can just use FX Truck for gold, silver, and all the other, for futures and all kinds of that. Okay, based on the Ichimoku perspective, we're above the Kumo, so we only want to be looking for buy signals. What's most interesting about this is that it produced a Tenkan Kijun cross, but since it produced this cross, actually since it bounced and got above the Tenkan, it hasn't been below the Tenkan. That suggests strong momentum on the side of gold right now. So if we start to see closes below the Tenkan, then that would suggest a weakening of momentum on this chart. Not necessarily a turning around, but a weakening of momentum on it. But it's been above it now since mid-July. That's over a month's time now. So with that being said, the momentum is still strong. We're seeing only 1 red candle for about every 2 to 3 blue candles. So that means people are still very apt to buy gold on this one here. Likely going to retest these highs. If it breaks it, hard to say. Actually, wow, it actually went right back to the flat top right here and then launched again. So, yeah, gold daily suggests right now momentum is strong. We want to stay with this one right here. So, hopefully that answers your question. Yeah, let me take a look at 4-hour here and see if I can get something out of this as well. Just want to peek, and I know you didn't request it. During that strong momentum trend, ironically, we got several Tenkan Kijun crosses on the swinger, all above the Kumo. Boom, good signal. That was at 12:01, went all the way about to 12 and a quarter. And we got another one here. That was around 12:30ish. Here we are around 12:45. So it's given a couple of those, and it hasn't been able to pierce the other side of the Kumo. What would be a sign that it is reversing again, or at least weakening again? Look for daily closes on the other side of the Tenkan, below the Tenkan, and then also look for possible 4-hour Kumo break. A 4-hour Kumo break could suggest a serious unwinding on this pair. So keep an eye on that one there. It could be very, very interesting. Okay, I'm going to pull back to my IntelliCharts. Let's see what other questions we got here. Jack, I'll answer your question about the private paying thing after there. Chan says, Chris, Jack is referring to the cable chart where you showed the fib lines with the measurement taken from the bottom of the high and all. Okay, let's do that. Assuming it was the daily. Hoping it was the daily. God, did I actually... This one right here. Okay, here is where I pulled the fibs, and that's where they matched up. Okay, so I still don't totally get Jack's question. Jack 1, that is. If the fib will measure on the second higher low, then another swing up leg may be seen in the future. Can it be the case? Well, of course it can be the case, but, you know, I wouldn't even, anything could be the case almost at this point. But that's not something I'd want to be, you know, thinking about. What I'd rather do is see how the market responds to this fib, you know, see how, if it can break below it, see if it can penetrate into the Kumo. And if it does, and it can break below the Kumo, it's very likely it's going to attack the 61.8. Could it create another leg up after that? Absolutely. But I'd want to see a price action signal that would confirm that. You know, maybe another Kumo break. Maybe it never breaks the Kumo. Maybe it just sits on this 50 Fibonacci here and then punches through, uses it as support, or maybe even the 38.2, uses the Kumo as support, and then pushes up to the upside. You guys might have heard that thunder. The storm's getting pretty heavy here. So, no chart. Sorry about that. All right, let's try that again. So here's the Fibonacci again on that one there. You know, again, in terms of moves to the upside, I would say these would be your two lines in the sand, right here or here. Here, and it uses the Kumo support and then launches up. Or here, it never breaks on the other side of the Kumo, or never closes on the other side of the Kumo, then pushes up above the cloud, and then that would likely create another run to here. That would be the likely scenarios that it would show, and it would do that. Also, another tanking Kijun cross to the upside would likely signal another leg up to the upside. So keep an eye on that one there. However, if this one fails, the chances for this starting another leg up dim immensely. And so it really starts losing options. The line of least resistance then shifts more to the downside than it does to the upside because we've cleared more hurdles to create a fall than we have cleared hurdles to create a rise. So with that being said, this to me is the major line in the sand with that one there. Could it create another higher low? Absolutely, sure it could. But again, these are the two major lines. If it has a Kumo break, close outside, and the Fibonacci, those chances dim immensely. So keep an eye on that one there for the Sterling cable on that one there. Okay, I have time for one more pair and time frame. If you can list both the pair and the time frame, not just one, but both, I'll be happy to take a look at it. So please feel free to go ahead and chime that in. The next one wins. And then after that, I'll be wrapping this up so the storm doesn't take me away. Chan says, thanks, Chris. Cool. Fantastic. Chewbacca, I need a time frame. Pound Swiss, I need a time frame. So first person to get pair and time frame wins. Ooh, Chewbacca wins it. Okay. You know this, Chewbacca. You've been to many of my classes. We'll skip the court martial for now. Okay. Ooh. Very interesting. Can I look at the daily real quick? Just want to look at the daily real quick on this one. Wow, we just took out a major, that's why I wanted to look at this here. We just took out a major low at 57.86. And if I'm correct, that might be the all-time lows on this bad boy. And if it is, oh, we are very close. So here's the 30-year chart on this. And we just took out a major floor in sterling Swiss at 57.86. We're now holding just barely above 56.18. So zooming into these levels here, really, you only got a few more to go. You got 53.25, which seems now at this point a likely target. The problem is we're about 170 pips away from resistance, a good resistance point, which is 57.86. So a small pullback, a gentle pullback would be nice. And then beyond that, we have 51.13. After that, there isn't anything else. So we enter the twilight zone at that point. Now, taking a look at the 4 hour, let's see if there's an opportunity on that one there. Create a tank engagement cross back here, Kumo break. Take a look at this flat Kumo break that I talked about. What's one of the common things that flat Kumo breaks do? They break out and they pull right back to it off into a line. It did both. Perfect setup for a Kumo break and gone. Since then, thing has been nothing but bearish. It hasn't really given us it hasn't given us a new signal on that one there. Kumo's still strong. There may be a signal on the 1 hour. Not there yet. Had a medium cross. If it continues to sell off aggressively and then kind of has a little sideways thing, corrective move sideways, a very mild pullback, and in that process it creates both an upward and then another downward Tenkan Kijun cross on the 1 hour, that might be a pretty good signal to take, especially if it never touches the Kumo. So keep an eye on that one there. There isn't anything in the 4 hour. The 4 hour suggests further losses. Daily suggests further losses. But it seems like the only way you might be able to pause something on this right now in the near term would be the 1 hour chart. So hopefully that answers your question there. But this opens up kind of the floodgates for a lot further losses on sterling Swiss. Okay. So that's pretty much it for today's class. I want to thank you all very much for coming. It was good having you all here. In fact, I'm going to go down the list and thank you all for coming. So Jocelyn, Miguel, Frank, John G, Miso, Chan, Jack, Alex, Yen, Z, Harley, Carl Blank, Abel, Wolf, May, Angela, Ken, Jorge, Mappos, Tom D, Rumble, Sirius, Jorge, Tomcat, Jack, Fernando, Rockabusser, London, Akisi, Ash, Capsule, Burden, Chewbacca, Gaza, Dakin, Kanai, Salka. Thank you all very much for coming. If you have any questions, Maud said it's been recorded. I didn't even know about it. They did it without me knowing. Very interesting. So this will be recorded. It'll be on the website tomorrow. You can review it tomorrow, so please check on that. If you have any questions about my services, check this out. For SecondSkiesForex.com, I have a bunch of free articles on Ichimoku on there, free videos as well. You can check that out. Also have an Ichimoku course. And if you have any further questions, email me, info@secondskies.com. So until then, I bid you all adieu. Good hunting. And I'll see you next week. In terms of Jack's question, Jack, if you could email me, I'd love to answer your question there instead of taking the FX free time to do that. So go ahead and email me, info@secondskies. I'll be happy to tell you about that. Thanks again, everyone. Have a great week. Good luck trading. I'll see you next week. Take care.